We also want to talk about the economy because we have been focused on some of these other issues. And there's a new economic report out today on the GDP. We're bringing in Harry Hutchinson, who's our director of policy, who's really an economic expert. We saw, Harry, the GDP grew at 2.6% in the fourth quarter of 2022. That's despite pressure from rising interest rates. What does that actually mean for our listeners?
Well, it means that we are facing a muddled economy. And by muddled, I mean, yes, the economy is still growing. Yes, jobs are still being filled, but the labor force participation rate is going up in part because people are finding it difficult to pay their bills. The current inflation rate is around 6%. The economy grew by roughly 2.6% on an annual basis. But the economy also faces headwinds from higher Fed interest rate hikes. It faces headwinds because construction is likely to decline somewhat for the first time in 11 years, for instance. Housing prices have fallen year over year. So there are some issues, but it's not all bad news, is the way I would summarize it.
I think that's people are looking for that hope, too. They know they're not going to agree with the Biden administration economic policies, but sometimes those economic policies finally have to face reality. And we were talking about the interest rate hikes. The Fed is considering potentially, and the way they're portraying it is one more. So not these endless, potentially that may be done with these endless interest rate hikes, which I think would be very welcome to a lot of our listeners out there who have maybe tried to not be able to purchase a home or have had to rethink loans and loans especially that weren't locked in, that were floating rates, who've seen maybe their mortgages double in the past months, that even the Federal Reserve, who thought that was the way out of whatever economic issue we're in, is rethinking whether or not continuing to raise interest rates is the right move.
I think that's precisely accurate. It's important to keep in mind that if the Fed continues to raise interest rates, particularly at a half point or 3/4 of a point a month, guess what will happen? It will crater the economy, and it may induce more bank failures. We've seen the fallout, if you will, from the Silicon Valley Bank and the takeover of Signature Bank. We've seen rumbles at First Republic Bank in San Francisco. Credit Suisse was taken over by UBS. And so there are plenty of problems in the economy if we look out. And so I would encourage the Fed to be very cautious about continuing to raise interest rates.
I mean, you brought this up here because I think it's important for people to understand. As we saw that banking crisis start occurring, and then it's kind of, the news has kind of slowed down on that, at least what's being reported in, just mainstream news outlets. It doesn't seem like it's quite as scary as it might have sounded 2 weeks ago or a week and a half ago. At the same time, though, if interest rates, they have to even think twice about raising it another quarter point. Because you think that alone could put more banks at risk.
I think it would. And it's important to keep in mind that there's a major academic study out on the Social Science Research Network, which claims that hundreds of banks are at risk and $300 billion worth of deposits are at risk, and the risk will rise if interest rates go up. Keep in mind, there are a huge number of uninsured depositors who have huge amounts of money in many of these banks, and when they hear a whiff of bad news, their instinct is to go pull that money out, and we live in an era in which we have fractional banking. What does fractional banking mean? It means that the banks do not hold reserves for all of their depositors. And so what depositors are, if you will, banking on is good management, good regulation, and the fact that the banks will not fail. There's one further complication that I need to mention, and that is woke banking is a problem. What do I mean by woke banking? I mean what Janet Yellen has suggested. She claims that climate change is an existential threat to banking in America. Now, that is a nonsensical claim, but if you look at the Silicon Valley Bank, guess what? They made a huge number of high-risk loans to venture capital firms invested in climate change initiatives. And many of those initiatives are about as successful as Solyndra was under the Obama administration. That company failed.
Logan, I think, again, for our listeners, the economic, it's number one issue to everybody. You've got to be able to pay your bills, to be able to fund your church, the ACLJ, to be able to write those donations. And you've got to know, kind of be able to predict a little. People need that kind of ability to say, finally, is this administration admitting, which it looks like they might be, that what their strategy was not working?
Yeah, I think hopefully it is. And like you said, hopefully there's some sort of comfort that could come over people in terms of financial security as well, because that's something that is going to be a huge issue. I think it should be a huge issue going into the next election.
Usually it's the number one issue.
It should be. The economy usually is. I feel like less is are the banks crumbling? Right. Less is the money in my bank safe? That's even a question I don't think most people have even asked to themselves. Like, I'm talking about normal, all of us normally. If you're not in the financial thing, in the last 2 weeks we all went, okay, hold on. That's something we need to be discussing as sort of the chaos sort of surrounded some of those banks